right? So if you look at the total market cap of let's say all the cryptocurrencies combined, it's roughly around $2 trillion. The daily options trading volume in the Indian stock market is the largest in the world. It's actually the amount of options traded in India is actually greater than even US, for example, right? So Indian markets are very evolved. There's a very famous saying in investments, right? It doesn't matter when did you get in. What matters is how long did you stay. Right, so if let's say I know a lot of people who actually bought Bitcoin back in 2011, 2012 when the prices were less than $100.
Okay.
Right, and once the prices became, let's say, $500, they sold. They were like, oh, I'm getting a 5x return. Today that Bitcoin is at $55,000 as we are speaking, right? Roughly $50,000.
So cryptocurrency has been highly volatile nowadays. So has it affected the new coming investors or beginners? What's your take on it?
Yeah, it's actually pretty volatile, right? And that's largely because it is still early, right? So if you look at the total market cap of let's say all the cryptocurrencies combined, it's roughly around $2 trillion, right? And you compare that with something like the US stock market. So if you combine all the net worth of all the stocks in the US stock market, that's around 50 to 60 trillion dollars, right? So I'm telling this to give you a sense of how small and early the space still is, right? This as an asset class. And when the asset classes are small, they're of course volatile. So yes, it definitely impacts the sentiment and the confidence of the retail investors to participate in crypto because it is very volatile. I think at this point in time where we are in the journey, it's important for people to be like really aware about what they're investing into. End of the day, most of these cryptocurrencies represent a piece of technology, right? So let me take an example. The stock of Netflix versus the platform Netflix, where you watch the shows and all, they are two different things, right? Let's say whatever you are watching on Netflix today and tomorrow, if what the show you watched today is not impacted if the prices of the Netflix stock falls by 50% tomorrow, you're still able to run the like operate the platform in a similar way. You're still watching your shows, you're still like having a good time with Netflix, right? Similarly in cryptocurrencies as well, there is a technology which is supposed, or let's say a particular piece of technology that is supposed to do a certain task, and there is a representation of the stock of that in the form of token or coins, which that people refer to, right? So if you really start taking very informed decisions about the market and try to first understand the technology that you are investing in, right? So when you, let's say, purchase Ethereum or the coin of it's Ether, right? Ether is the coin which represents Ethereum as the technology. So when you are purchasing Ether, for example, if you are aware about what is Ethereum, right? When you are purchasing Ether, what are you investing into? You're investing into Ethereum essentially. So when you try to understand that, you will have a good sense of how the future looks like, and only then will you be able to make informed choices, right? And if you really look from a very long term horizon, and if you are confident about investing in a particular piece of technology and you think that this is going to grow in the long run, then you will not really be impacted from short term volatility, right? Having said that, I think it's slightly unfair that crypto it's only is referred to as very highly volatile when it's actually not true. I mean, if you look at some of the stocks in the US market, for example, Netflix I was talking about, Robinhood, these are the stocks that these are multi-billion-dollar companies, multi-hundred-billion-dollar companies, and their stocks were down like 70%, 80% in certain quarters, right? So I think it's not just crypto which is volatile. The general financial markets are volatile, right? It's some are less volatile, some are more volatile. But the moment you look beyond the noise of prices and go deeper into understanding the product, the technology, I think you as an investor would realize you would be able to actually price the asset correctly yourself. You would know whether an asset is underpriced or overpriced, which is what people usually do in financial markets as well, right? They try to understand the business and try to price the stock and come to a conclusion whether the price which it is available at this point is overpriced or underpriced. Accordingly, they buy or sell or long or short, right? Similar, when you try to follow a similar approach with crypto as well, you would realize that for you as an investor, it's not really volatile. I mean, you'll be very comfortable holding the stocks even if the prices are going down, because let's say if you're invested for the long term, right? If you are there just for price speculation, then yes, I mean, you'll be pretty much impacted by it. And I would urge the retail users to actually stay away from, investing into crypto just for the sake of price speculation. There are already enough speculators out there who are like making the markets volatile. It's now important for the industry as well that the people who are putting their money into crypto really first try to understand what they're putting their money into. And I think once you do that, then of course there is not a lot of question about volatility and all.
Okay. So, sir, what is the main difference between Indian derivatives and crypto derivatives? And what are the advantages of crypto derivatives?
Sure. I can actually rather talk about the difference between crypto derivatives and the traditional finance derivatives, right? Because Indian derivatives pretty much works similar to how other countries' financial markets work, right? So, if you have specifically asked me about Indian derivatives market, first of all, in crypto, if you think about the types of financial instruments, right? You have spot. Then within derivatives, you have futures, you have options, and then you have structured products, multiple stuff, right?
Okay.
Whenever a new financial market evolves, be it a stock market, be it crypto, be it a stock market of some other country, first the spot market grows. As the spot market grows enough, then volumes start building up in futures. And then let's say when futures start to grow big enough, a lot of institutions, large capital comes in, then options market starts to build up, right? In the Indian market today is very evolved, right? In fact, from what I know, the daily options trading volume in the Indian stock market is the largest in the world. It's actually the amount of options traded in India is actually greater than even US, for example, right? So Indian markets are very evolved, right? And again, the government has played a very massive role in regulating it very carefully, right? And it has inspired a lot of confidence in people. They have participated. But talking about the market specifically, India, of course, has spot, they have futures, they have options, everything. Crypto was largely restricted to spot until I would say 2017, 2018, right? It was only late 2017, 18 that futures started to build up, right? And today futures has become, sizable, I would say, significantly sizable as compared to the spot trading volumes in crypto. It's still very early. I mean, the headroom for futures to grow is still very large right now. Once, let's say, futures probably become another 5x from here in terms of trading volume, that is when options will start to pick up. Crypto options today are negligible. They are very, very small, right? Which is not the case in Indian markets. In fact, I would say the total options trading volume in the Indian market would at least be probably 100x of what it is on spot. But in crypto, the options volume is hardly 1 or 2% of the spot, which is like a massive delta, right? Very big difference. So the market is still yet to evolve. So that's one of the big differences. The second is that the crypto markets run 24/7.
Okay.
Right? Indian markets, of course, they do not, exchanges do not run after a particular time of the day. This market is 24/7. The prices are continuously moving, whether you are sleeping, whether you are awake, whatever, right? Then you have participants from all over the globe. In India, of course, Indian markets, it's restricted to the Indian audience, right? It's geographically restricted, which in the case of crypto, it's not, be it spot or derivatives. One major difference, which is actually very interesting, is that is in futures, right? So in Indian or stock market futures, there is an expiry, right? So the future that you buy of a particular stock expires after a certain period of time in the month, and if you want to continue holding that, you have to pay a premium and roll it over to the next month futures, right? Which means that these are essentially dated futures. I'm referring to it as dated futures because they have an expiry date. In case of crypto, I mean, some of the people in crypto innovated a new instrument or a new type of futures which has no expiry date. It is perpetually valid. Hence, it is called perpetuals.
Okay.
Right. So the biggest difference between stock market futures and crypto futures is that stock market futures have expiry dates. These futures do not. Right. The advantage of not having an expiry date on the futures here in crypto is that you don't have to pay a premium to roll it over, right? Because there is no expiry. You can hold it perpetually. You can hold it forever, right? There's a new concept of funding fee that is incurred to sort of cover up for the premium that you are supposed to pay. But it's a very interesting instrument for people to participate in, right? But long story short, I think the markets are very in very different stages of their evolution. Probably, let's say another 10 years from now, crypto options will also be super big, and the overall market would have probably evolved to hopefully $10 trillion plus, which is currently at $2 trillion. I think in 10 years it should definitely go beyond $10 trillion. It is not a financial advice for anyone, any listener or viewer out there.
Okay.
But I'm like, being somebody who's building in this space, I'm generally bullish on the market, right? Otherwise, there's no point of me being here and building in this market, right? So, yeah, I think very different markets when you compare Indian derivatives and crypto derivatives. But yeah, I think as the market progresses and evolves, a lot of similarities will start to show up.
So the cryptocurrency prices are too high. So when a new investor is coming in, they usually offer the lower option. They never go for the higher risk. Do you think that is a good decision?
So you're asking if new people who come into the market, they usually opt for currencies that are priced lower at this point, and not something like, let's say, Bitcoin, for example, that's very expensive. You're asking if that is the right approach to the market.
Yeah, because for investing in Bitcoins, usually there should be an amount of 40 lakhs minimum, I guess.
Yes, if you want to buy a whole Bitcoin, but you can still invest even 100 rupees, right? You can buy, you can purchase fractional Bitcoin, for example, right? Again, one of the differences from the stock markets in India, where today you are not allowed to buy, let's say, 0.5 Reliance stock.
Okay.
Right, you have to buy one integral, like one stock or two stocks, three stocks, right? You can't buy 1.5, 2.5, right? Or decimals, for example, which is not true in cryptos, right? You can very well buy, let's say, 0.01 Bitcoin worth whatever $1,000, right? So I don't think, prices being high should actually, be the reason why people should opt for lower, currencies that are priced lower. But I think, as I had mentioned previously as well, the right way to invest, like to approach the investment, is to actually understand what you're investing in. And if you really believe in what they are going to achieve as a project or as a company, then you should buy that crypto, right? If you really want to invest. There's a very famous saying in investments, right? It doesn't matter when did you get in. What matters is how long did you stay, right? So if let's say, I know a lot of people who actually bought Bitcoin back in 2011, 2012, when the prices were less than $100.
Okay.
Right? And once the prices became, let's say, $500, they sold. They were like, oh, I'm getting a 5x return. Today, that Bitcoin is at $55,000 as we are speaking, right? Roughly $50,000. So there were people who got it at $100 and they got out at 500, right? So the point is not when did you get in, right? You getting it at $100 was not a win. You not being able to hold till $50,000 was a loss, right? As in, not a loss, but I would say the victory is not that you got out at 500, right? Real victory would have been you holding on till 50,000, maybe till 100,000. God knows if the price goes there. So what I'm trying to say is that even if you are getting in today when the Bitcoin is at $50,000, and if you hold it, and when the price becomes whatever XYZ, right, that will determine, the future will determine your returns, not that you are late today, right? And even if you think that, hey, this is too expensive, and there is not a, let's say, 10x upside in few years on Bitcoin specifically, you can very well go for some of the earlier projects, right? But again, this is not a financial advice in any sense. All I'm trying to say is that whatever you're investing in, you should be aware of what you're investing in, right? Price, regardless of the prices. I think also price honestly is not the right technical metric to look at. What you should be looking at is the market cap, right? Because prices are a function of how many shares you have in circulation, right? A company that is valued at $1 billion and have, let's say, only 1,000 shares in circulation, each share will be priced at $1 million. Whereas another company that is valued at $1 billion and has 1 million shares in circulation, the price of each share would be $1,000. So both the companies are valued at $1 billion only. The price of one company's share is $1 million. The price of other company's share is $1,000, right? So you should not be fooled into thinking that the one at $1,000 is cheaper and the one at $1 million is expensive, because the valuation of both the companies is the same. It is just the number of shares in circulation because of which the price of each share is more or less.
Okay.
Right. So I think it's very important for investors to look into the market caps and the valuations, not into the price of the product. Right. If Bitcoin was, let's say, 1,000 times more in circulation, the price of each share would be, or each token would be $50, not $50,000, right? Would you buy Bitcoin then? I think no, the answer is not to evaluate from that lens, right? You should look at the market cap. So yeah, but long story short, I think the bottom line is to understand what you are getting into and only then put your money.
Okay. So what are your advices you would like to give to the new coming investors to the cryptocurrency market?
I think there's only one advice: try to understand the technology. Do not just get lost in the noise of the herds. When whether the markets are going up or going down, there's a lot of noise in the market that is created by people around you, online, on YouTube. A lot of influencers, they'll be talking about a lot of things. Trust me, not a lot of people understand what they're talking about when they talk about prices or a particular cryptocurrency. It should be your responsibility to yourself to actually understand what you are really getting into. Try to understand the technology. There are a lot of, let's say, content out there, videos or articles that try to explain people in very simple terms the nuances of a technology that you are investing in, right? So try to spend some time consuming those content, try to understand, and only then invest. If you do not understand something, it is better to let go of that opportunity and stay out of it, instead of FOMOing into investing it. So I think that's the only advice I will give people, and we really need such responsible investors to participate in the market if the markets are supposed to grow.
Okay. So thank you so much, sir, for your valuable time and also filling it with a lot of knowledge of cryptocurrencies. So I wish you all the best. Thank you.
Thank you so much for having me. It was a lovely conversation, and I hope I was able to add value to all the viewers in the process. Thank you so much.
Thank you, sir.
Awesome.